What's up, everybody? Chris Franks with Texas West Capital. Fibo with Texas West Capital as well here. Good to have you all joining us. Look at that, guys. Fibo, two times coming out here. He's back to the every other week as much as possible here, guys. I know you're excited. If I had one of those cool little things, I'd make the little yay sound come up, but I don't. So, and we do have people saying yay there. Yeah, confetti right?
Flying around.
So yeah. Gosh, man, sorry, my allergies are just really the last couple of days here in Houston, just really bad. So I'm having trouble focusing. But anyway, listen, if you're trading futures, man, this morning was a great time to be long S&P. I know Fibo's target was hit. I threw in more than a few trades this morning as well after the initial pullback right before the open, or a little bit there before the open. Just been absolutely fantastic day to be long with the S&P. Not such a great day to be long with Bitcoin.
Nope, not at the moment.
But you know, if you're in TWC, you know it's pulled back right where we were looking for the pullback. So now we just see, do we get the rally or not? You know, the way I've been looking at it is, you know, this is kind of like that do or die kind of area we're at right now. If we can get an impulsive breakout and close on the daily above this recent swing high from the other day, I think, because that's where the monthly pivot is, I think we're probably in pretty good position to say that low may be in. But if not, if we continue down lower from where we're at here and whatnot, odds increase. We're going to look at 74 or 69,000. But my thought, and I don't know about you, Fib, I don't know if you have thoughts on this, but my thought is if we're going to do that, because it's been, you know, the whole downside has been so slow and whatnot, that it would be probably a sharpish move down there and leave a decent sized wick on a daily or a weekly or something, and kind of, you know, shake people out, hit that liquidity and kind of pop up there.
Yeah, I'm with you on that, because if you look out at the sentiment of what people are talking about, I think a lot of people are bearish for one.
Yeah.
And then they're also looking for those areas that you're talking about on the downside. So when everybody and their brother is waiting for that move, if it drops there, then you get a lot of buying interest, and then you get that long wick that you can get that V-shaped recovery kind of thing. And that's, I'm kind of in agreement on that if it ends up breaking down. Yeah. So all my positions right now are cautiously optimistic.
There you go. That's it. I love that term. It's what I use so much.
Well, it makes sense though, because it's like it's whenever you use that term, it's then you got to go into your risk management. What does that term mean to you in the risk management? For me, it means to reduce my exposure. So if if I end up taking a loss, the loss is small and it doesn't eat up every gain that I made over the last, you know, couple of months or whatever. So that's the way I kind of approach a cautiously optimistic. I want exposure, even though it's a little bit on the downside, to take that little bit of a risk, because we are at an area that it could turn around and start heading the other way. So we just have to kind of play it out and let the market come to us and see what happens.
Exactly. And you said it right there. You got to let the market come to us, right? I mean, I think that's the biggest things most people miss. And that's actually funny that you said that, because I did tweet out this morning. I said, oh my gosh, where is it there? Basically, I was talking about traders eventually learn that you can't force a setup, you know, and that's what we try and do when we first start in, right? We get overly excited, we get bored, we get worrisome, all this stuff comes in and we try to force something. But we're trying to, you know, when we do that, we're trying to tell the market what it's going to do versus what you were just saying, which is kind of sit there and just let the market do what it's going to do, you know, and we have ideas for how we're going to react when it does.
Yep. I'm in total agreement.
Because say yep out of that, huh?
Yep. Total agreement. No, it's good stuff.
Yeah, somebody's got a question. Well, let me see. I got two questions here. One is, first for me, it says, when we started to draw down in October, you were sort of poking fun at the people saying the top was in. Are you still as optimistic now as back then? I wasn't really poking fun at. What I was trying to point out was, when you're up there, there was nothing on the macro picture. So you start to look at the weekly, the monthly, the macro look at the cycle that suggested there was anything up there say, yeah, the top is in. What you were doing was guessing, going, oh, well, last time at this point out, it was the top. So this time, at this point at the top, right? So that's really what it was. It was more of a, hey, listen, we really don't have any kind of thing happening here that says the top is in yet. At this point now, we still don't have anything just yet that says that the top is really likely in. Now, a local top, sure. But if you're a long-term holder of Bitcoin, right, if you're looking through a cycle, when you're looking at that, a local top is not something that you should be trading in and out of. If you're a cycle trader or whatnot, and you're trying to trade the whole cycle, I mean, you should be holding on to it, right? So yeah, not really poking fun at, but just kind of saying, listen, nothing has happened at that point in October that said, okay, the top is in. We had no confirmations of any kind coming in. Now we've got something here now that says that maybe, and that was what I was talking about then. You had to get, a little bit further down there, drop below 100,000, kind of looking at that. So yeah, but I don't necessarily think the top in is just yet. If we get a move down to 74 or even that 69, and it's not a quick kind of like move back up, 10 or 20 grand. I think there's a good argument that, the top's likely in. But if we even get that move down there and that quick, rally right back up, I think that really invalidates that idea. Not that it would be confirmed that the low would be in just yet, but that would be a big, kind of wake up and go, okay, that low may actually be in there with that.
Yep.
Fibo's got a question here too. They're asking, you said last time you mentioned 3XW closes below the 38.2 fib at 85,832. Looks like we might get that. Thoughts?
Yeah, I mean, as you were just talking, Chris, about is the top in at 126. I've never had a signal that told me that local top is it. But the signal for me is exactly what that person is saying, is 3 weekly settlements and consecutive underneath the 85,832 is my signal to me that local top is the high, and we're going to go much further on a much larger correction to the downside, and kind of switch that whole mentality into a primary bearish market, to where we can go all the way down to the 60 or 50K or who knows where. But again, it's a macro look, so it takes 3 weeks to finalize that psychology, because it can definitely wick down underneath that level, which we have, but we have not had a weekly settlement underneath that number yet at all. So to me, that's where that cautiously optimistic comes into play. Yes, we can probably go down there and test that level again, but do we get 3 consecutive weekly settlements underneath there? If we do, that's going to change the whole sentiment, or the whole pattern of the market, to where it's much lower pricing to establish a floor, where the floor right now looks like it could be around the 85. I mean, 80 was the low, but I mean, when I'm talking about the structure of it, it went to 80K, but it didn't settle. It went back up and settled above 85K for the week. So that was kind of that could have been a sort of a V-shaped recovery, maybe, if we hold here and start to head higher at this is kind of a inflection point area that we should hopefully find some buying interest in here to head us higher. But to me, that weekly target 3 settles is the line in the sand for me from a psychology standpoint. Otherwise, it's just a large correction in a bullish market. That was probably what, 35%?
35%, yeah, 34%.
Which is what, the third one since we've been on a low of 15K.
Exactly.
We've had 2 other 30 plus % moves to the downside. So this isn't any different. It just seems a lot more stressful because it made a new all-time high and then started to dump. And then that's where I think a lot of people were thinking that the high's in, which they could be right. But when it first happened, I don't know what kind of signals they were looking at to say that the high was in, other than throwing a dart and hoping that they were right.
They're like, oh, well, the last time it was this many days and it hit the top. This time it's this many days, so there's the top,
Yeah.
So it's the 1 and 2 data point thing, Yeah,
I'm not poking fun at them, but I am poking fun for anybody that's trying to get the top or bottom. I'm just saying that right now. No, I'm kidding.
And by the way, anybody listening to what Fibo just said there, with his system, the keyword is consecutive. It's not just 3 closes, it's 3 consecutive closes. So if you had 2, like 1 week and then a second week, and then the third week it closed back above it, well, you'd have to have 3 consecutive. So now you'd have to start over again looking for 3 more closes below it to do it. And listen, guys, here's the thing. Think about it. You're talking about a cycle which is multi-year here. Yeah, it's going to take you a little bit to figure out on the macro if that top is really in. But the worst thing that happens is people do something like this. This is what I've learned, my, ridiculous amount of time I've been doing this, is that you have to be careful when you do this thing where you go, okay, well, 1 other data point or 2 data points were this way, so this way has to be the same. And the worst thing you can do if you don't really understand trading, if you haven't been doing it for a while, you don't understand markets, is to hop onto something like that. And maybe they got it right. And you go, oh my God, look, they know what they're talking about. That's absolutely the worst thing you can do. There's a person on Twitter right now, and I get so tired of seeing his posts. He's got this Wyckoff schematic. And in the thing, he says, I don't know anything about Wyckoff, but look at the price action. It looks the same, right? And he's been milking that because prices actually come down, as if throwing that schematic up there means anything. And this is the thing: if you don't know Wyckoff, you don't understand that it doesn't mean a damn thing. You're going to look at it and go, oh yeah, look, it looks similar to the price action, so yeah, that's how you use it. Wyckoff is not about price action; it's about price action and volume at specific areas. That's what it's about. You actually have to have the volume, and they're just showing, because your distribution and your accumulation will often look pretty similar. But the scary thing is, if you're new to trading or you're not experienced as a trader and you really don't understand how markets work and whatnot, and you see stuff like that, you're liable to get hooked onto it and go, oh God, yeah, they know what they're talking about. The problem is that most often leads you to losing money down the road. So they get lucky once, they guessed it right. Okay, hoorah. But if you're in trading, guys, you're not here to guess. You're here to work with probabilities, put as many probabilities in your favor as you can, and take your trade. So anyway, had to get that out there. But I know we're talking a bit here, and I know Fibo's got to go a little bit earlier. So let's go ahead and get his charts up here so you guys can see what he's looking at. Let's do this to get us a little bit bigger there. Fibo, talk us through it, man.
All right. 4 hour. I wanted to show on the 4 hour. I put in this. I had this weekly target hit. Is that what we were talking about on the weekly? That was that 85,832 level.
Mm-hmm.
That was bought on the 4 hour, and then it was also bought on the daily, which I'll show here in a minute. And then as this is a good example of the 3 settles just for the 4 hour. So when this actually hit down here. I mean, it definitely had 3 settles under here, but this is like, I bought this, but I held this position here, and I'm going to continue to hold this position and stop out if we get the 3 weekly settlements underneath, because I just want to keep some exposure in case we get a V. I mean, I'll have some lower targets. I'll show you down on some other charts, but just having limit orders in there in case we do get like a V-shaped move to the downside. I would want to have some limit orders in some areas if it wants to kick back higher. But this is an area that I'm really watching as that line in the sand. So I had a buy here, and then we went up and then hit the bull zone, and then had another buy. So I'm long 2 or 20% or whatever way, or 2 tranches or whatever way you want to look at it. But the average of these 2 right now is at this black dotted line. So we're just above the average at the moment. And a couple of things that I'm watching on the 4 hour here. One, we're possibly dipping down into the bear zone here. But we do have 2.5 hours left because the candle right before it didn't go into the bear zone. But this next move to the downside here has pushed it down into there. But I'll have to see what it looks like on the settlement. If we actually hit the bear zone, the way I'm playing this, typically, if we didn't have this big line in the sand on the weekly, I would just get out of all my positions, all 20%, and just take the loss or right around break even or whatever. That's the typical move. But if we go into the bear zone here, I'll just get rid of the 10%, So the buy I had up on the bull zone here, I'll take that little bit of a loss and just still hold this as my cautiously optimistic long that I want to keep exposed for this time being. Now, if this wasn't here, I would just get out and just move on to the next thing. But we'll have to kind of see if this thing pops back up in the next couple of hours to see if it brings it back up into the bull zone again, which also could be a buy signal. Not really threshold theory, but if you're looking at it just from an RSI move, that could be a somewhat of a buy signal if that kind of comes back up into the bull zone here. So that's what I'm kind of watching at this point. A couple of the other things on this chart that I'm watching is if you take the trend line just from right here, we're actually testing it at the moment. So we had the breakout right here. So we had basically the three settles above the trend line, and then we got into the bull zone and started to head higher. Momentum just didn't grow, and I was like, come on, momentum, let's go. And then we just got into this period of consolidation, just like we did again here. So it's like consolidation in a swing trading world kind of is not fun because it's just like you might take a few little losses, and then once it breaks out, you'll make all of that back on the trend. But it's or it breaks down, and then you wait for a much further downside to get long again. So that's the way I'm kind of approaching it. But the scenario I'd like to see is if this holds here and you take the well, there's a couple of things I could look at here. One, if you just take the low to high just for the move, you're looking at the 61.8% level right here. And that could kind of wick down to that area and kind of come back up and hold us there if you're just looking at this leg. So this could be just a correction off of this leg that we just started at this point. So to me, that's still an area of possible support. And when you look at it just from a fib level, and then also the trend line's holding at the moment. So you got a little bit of support there. And the nice thing is my average, if I wanted to take it off, it's right there too. So all of it's kind of working together at an area that I would want to see where the inflection point's going to happen or not. But if you take the reason I really like it to hold here and get this trend line here, and if it holds and starts heading higher, the distance on this or the rate of change from the break point brings it. I'm roughing this in here, but it brings us up to right around 99K. Okay, and that's a good number for me because when you flip over to the daily goes bull at 98. So if we hold this and starts heading higher to that trend, to the trend line objective, it'll get it to where it will trigger the daily into the bull zone. And that's exactly what I would want to help bring up the probability that 80K low is in, and that 85.8 weekly target that I have is going to solidify a lot better with a higher probability of holding if that happens. And that's why I really want this area to hold, but there's nothing I can do about it because I can't control the market. So exactly. I'm sitting here just playing my strategy and my plan, and I just kind of go along with it. Now, a lot of times, if you are doing this and it's coming down into this area, people start getting really emotional when they see this happen, because it's like, oh my gosh, we're in the bear zone. But it's tough because when you are trading and you see certain things that kick like that, all the emotions start kicking up. Like, oh my gosh, what do I do? Oh my god, and then your mind starts going all over the place. And the best thing to do is to kind of just focus on what you had in plan, and then have your exits of the way you need them, like stops or whatever, to get out. So that's how I'm kind of approaching this at the moment. So if we go over to the daily, I got the weekly target hit here. This is the weekly previous shallow fib, which I'll show you here in a minute. But given that we're in this bear zone, we worked our way down to this level, and we had this kind of a I don't know what you would call a blow off bottom. What do they call a blow off bottom instead of a blow off top?
Just that V-shaped recovery as well.
I guess that's what they call it. But there was a nice wick here.
Bottom, though, I've never heard that before. I like that.
With the blow off top?
The blow off bottom.
Oh yeah, blow off bottom. Yeah, I don't know what the term would be. We can make one up. But the one thing that I like here on this weekly target is we had one settled two, and then that third green candle settled back above it and still maintained that as my support. went up to the shallow fib right here. So if you actually wanted to trade this while we're in the bear zone, you could be buying here and selling inside this little zone. I'm not doing that, but you could if you wanted to. But then it came back down and you could have bought it again and sold it again. So you could have done it twice. But we are working our way back down toward that level. But again, I still want to see 3 settles underneath this level to really change my psychology of everything that's happening. A couple of things on here that I like that is still holding this level is this was a key threshold level that changed psychology here a little bit when it was on this downtrend. And this is one of those 31% or whatever. I don't know which one this one was. Let me see what. Make sure.
Right. I think it was that 31%.
I can't remember where those stupid little there they are. Like if you go down to the low, I think where's the low? The magnet's not working right, but that's about 31 right there. So that is one of the corrections, bearish correction in a bullish market. And then this is the threshold that busted on this trend line at the same time we went into the bull zone. So that all matched up really nicely. And then we've been on this run, which could be just so if you start the fib from here, this is just a move up, had the high, and then we just had a full retracement back down to the previous low on that breakout. And so far that's really holding as good support. And that's why I really think that that's a good line in the sand to tell me if this high is in by breaking down the pattern. Because if you break that down, then you're going to start looking into fib extension levels and a lot further to the downside. But when I don't normally do this, but I saw this on here too. So when you get down under here and you start to reverse back a little bit, and you get this kind of its own trend line break on an RSI. I like how that worked right here as it wicked down and then came back and didn't really make a new low and kind of held that support there and then started heading higher. But not that I'm putting everything on that, but it's a nice little look to show that it might give some emphasis in here. Now, of course, there's the ADX, but it's kind of ADX is all these are lagged indicators, but you got I use some other things to help me take away the lag kind of behind the scenes, and I just kind of put it out as a good picture here. But what I'm looking at here is you had the momentum moving up for the bears, and you got this nice correction. Then we started heading back the other way, and the ADX has been losing bearish strength. Of course, it's going to happen when the market starts to move to the upside. But I want to keep an eye on this as it starts to continue to dwindle here. So if we consolidate in here, this will start to dwindle, and maybe we get the green positive directional index back going again. But given that the momentum is still there and the bears are still in control, that's where that cautiously optimistic comes into play. Yeah. And that's why I have that line in the sand that I really want to kind of keep an eye on because we aren't out of the woods just yet, for sure. Because given that the 4 hour might go back into bear again, then that means all the time frames that I look at are back in the bearish zone, but not necessarily completely psychology bearish. It's more along the lines of sideways to lower, going down to test some of these support points, some support points. Now, if you want to play the break here, the first buy would be right around this 73. I wouldn't be doing that because if we got 3 settles underneath this, I'm looking at much, much lower. But if I'm going to have an order here as a limit, like what Chris was talking about, if we go down and get a V shape, if this ends up breaking down and you get underneath this, basically, if you get back under 80K and there's like a shit ton of stops at 79.99999 repeating, with all the algos that are probably out there, that might shoot down to 73.9 pretty fast. So I'd want that limit order in there because we could actually go down and then pop back up pretty quickly as everybody and their brothers waiting for that mid 70s kind of area to test that previous low. Yeah. So I want a limit order in there just in case we pop back up. So that's what I was kind of talking about earlier. So given that, so the only thing I'm long on here is at the weekly target, and then I'm long the 20% on the 4 hour. Now let's go over to the weekly. This is where that number actually comes into play. This is where we broke into a long-term bullish zone here. Once we had that 15K low, broke into the bull zone around 22K. and then we've been running ever since. We've had those couple of those 30. This was a 30 plus correction. This was a 30 plus correction. I think that was the only two. This might have been like 20 something in these consolidation areas, but we're on this one right here, and yes, we went into the bear zone, but that previous shallow fib is still there that has never hit on this move to the upside, and when you look at it, so take like this into consideration. You move to the upside here, make a high, and then it works its way down to the correction, and the correction wicks down below and still holds that previous shallow fib. Even though we had that correction, it didn't break structure. Now it stayed in the bull zone here, and that's the only thing that concerns me is it went into the bear zone, but it's still holding that level, and that's why that level to me is a major line in the sand. Because then when you walk up to this one and do the same thing, the previous shallow fib was at 75.3, which is right there at that low. So if these two hold and this holds, I don't see any reason why this one will hold. And of course, we're getting a little bit more pressure because we are in the bear zone. But again, the momentum is just getting started for the bears. So it could fall out of bed. Don't get me wrong. It could break here. And then we would be in a lot more bearish psychology. And which I think it would really mess up a lot of people if that ends up happening. But if it does, and we get those three settles underneath, the 61.8% level for me is at 66.25. That's where my limit order would go in on a move to the downside for the long-term look. That's kind of like an area that I would look for to add longs, add cold storage, a lot of different things at that level. Now, when you go to the 4 hour and the daily, as the market's working its way down in a bear market, sometimes the 4 hour will go bull, and then we could take some advantage of some of the jumps up in the market, and then as it's continuing a bearish move, or we can start to do some shorts or buy some puts or those kind of things. But I don't want to get involved in any of that right now because I'm still playing this and I'm sticking to plan, and I'm looking for buying interest to keep continuing to come in these low 80s to hopefully hold this target. So that's the way I'm approaching BTC. So to me, the high is not in yet, unless we break this key support to the downside. So that's where we're at.
Get the 3 consecutive settles.
Yeah, that's just the way. That's my strategy. That's the way I'm approaching it. You don't have to mirror that by any means, but if it's something that makes sense that you can attach to what you're doing, and maybe there's some confluence in what you're in areas you're looking at or anything like that, maybe that'll give you some an extra edge, I guess. I don't know how that would work, but for me, that's what I'm looking at.
Maybe give you more confluence or something.
Yeah. I like if I follow people that I know that are good at what they do, and they can explain things. So like if they have something like a chart that's put up and they have the means to explain what's going on and why they're doing what they're doing, then that's confluence to me. But looking at some shit chart that somebody put out there that looks good because they cherry picked the shit out of it, that's different. That's not confluence to me. That's just like they just put their narrative into a picture and then go from there. So there's a big difference, and that's why I always say if you're looking at people out on X or anywhere, ask them questions, and if they can't answer it or give you a direct answer, then I would just say, just move on to something else. Because if they don't have an explanation, then they're throwing darts and they want clicks. That's clickbait. And people will get hurt trying to trade off of them is what it is. Or they can get lucky and then they make $1 million. Who knows? But you don't want to, I'm just saying, just ask questions. And if they can't answer it, then to me, they're just not doing it correctly. And to me, they're more of a hindrance than they are somebody that's helping. I'll put it that way.
Absolutely.
So not that I hate to put hate on people, but if they're putting out stuff like that, to me, that they're hurting you. And I just don't like that, just as a personal, not that I'm always going to be right by any means. It's just more along my motives are better. I feel like they're better
there you go. Exactly.
than what others are doing. I'll put it that way.
Mm-hmm.
But that's BTC. Anything on this, Chris, or do you
No,
have?
man, what I'm saying is, yeah, I mean, what I'm saying is, we're kind of looking at this area, and this could just be an ABC up, off the thing, which would get us that move down toward 74 to 69. But
Yep.
If we can get a rally from here, if we can hold the 83,800 kind of low, which was right on December 1st, I guess it was. If we can hold that and break out above, what was it, Wednesday's swing high, impulsively, so, a largish candle spread, spike of volume, and close above that, then I think, it's potentially a 1-2-1-2, which sets us up for a rally up, 5 waves up into the all-time high, and then likely get a 3-wave pullback, and then we get the breakout. But right now it just depends on what happens in this area. Can we hold it? 4-hour stochastic RSI is bottomed out and oversold. RSI is nearly oversold. We got almost a 61.8 pullback off this bounce from December 1st. So yeah, we'll see if we can get the breakout higher from here. And
so this is the 1-2-1-2,
and then potentially 1-2, right? Or like I said, if it breaks down below that first wave 2, that would just give us an ABC up there, and that would lock it in as corrective, and most likely we'd be breaking down toward, again, this potentially 74 or even 69,000. So yeah.
Yeah. Oh, I got you. No, that makes sense.
Yes, sir.
Cool. All right, let's chug on over to Ethereum here.
Everybody's favorite whipping post.
Yeah. But basically I'm long on this one, 20% also. My Ethereum bucket is way smaller than my Bitcoin one. So I'm willing to take a little bit more risk on these because I can take a little bit more price movement and not lose as much.
Right.
How I'm playing this one, we went into the bull zone and bought and went up and made a new high, or not a new high, but made a pretty nice move here on these 3 candles on the 4 hours, and then it dipped back down, and I bought the shallow fib again. This dotted line is basically my average. I'm in at 31.23.5, so I am losing a little bit on this side right here, but we're still in the bull zone, and to me, my stops, because everything in crypto on this is all spot for me, and that's why I can, like if it goes into the bear zone here, and breaks down, and basically if it hits the bear zone, it's already, like, here's the 38.2% level at 31.60.70 right here, and as you can see, we've already had 3 settles underneath this line. So if it goes into the bear zone, which is right now around 3,005, that's kind of my risk and my stop at the moment. Now, of course, it can go much further down, like it could fall out of bed or anything like that. But if it goes into the bear zone, I'll end up selling the 20% and getting out, because there's no long-term, weekly line like BTC has.
Right.
Ethereum's already broke down all of its patterns, so I haven't really been trading it as much. But this new bull zone, I was thinking, well, if the BTC went into bull zone, maybe this will kind of follow, or vice versa. So I got in 20% long. So I'm just really trying to see if this bear zone holds or not, or bull zone holds or not, and go into the bear zone. So, but again, the same kind of thing. If you look at the fibs this way, we're still kind of not even getting 3 settles underneath the 38.2 yet, but the 61.8% level could wick down to 29.17 and then pop back up and then still stay above 3,005. So if this wants to wick down and come back up, kind of thing. But that's something I'm just going to kind of keep an eye on and just trade it. If it hits and I get out, and then I'll set up the new zone. And if that happens, then this area down here at the 200% would be that first area that I would look at to buy, unless this thing comes all the way down here and then ends up settling there. And then I'll have to find a new area, which would probably be, if it did, it would be this 200%. And then what I would end up doing is putting a fib in at that point down to here. And then this low right here is right on the edge, but it could be around this area down in here that would bring in the next buy area if it wants to do a full retracement back to this level, back on this point. So that's where that would come in. This would be my like kind of buy area if I wanted to buy while in the bear zone. This is that first line of defense that I look at. Yeah. And then what price?
Yeah, what was the price?
Well, the zone is 2640 to 2700.
Okay.
And then the low is 2620 over here, which is underneath this. But if you look at the kind of where the settlements are here on the down and the up here, or not really settlements, ones that open and close, but you know where I'm talking, like the body.
Where those candle bodies are. Yeah.
Yeah, that's about 2680, which would be kind of almost in the middle of this range. So that to me would be a good spot. That 2680 would be a good spot there. Now, if it if you want to buy that, it's like my first line of defense, and then if it ends up breaking the 141, then you're looking at 2391 to the downside. But it could be where maybe it's just doing this whole thing all the way up to the upside and just doing a full retracement back down to the previous low, sort of like what BTC did on the daily. And if you did this fib all the way up to the top, the 61.8% level is at 2857. So that, or I mean, the 38.2% level is at 3004 or 5, which is right where we want to be looking here, to where this should hold. So if the shallow fib from this move all the way to the upside holds at this point, the shallow fib should hold, which is a nice signal for a move to the upside. So again, it's all bearing on the market holding the bull zone, of course. And if not, then we just go back to the drawing board and figure out where those next entry points would be. But again, this is not the most fun show ever because everything's kind of moving to the downside. But these are days that you gotta, this is where your risk management comes into play. Because a lot of times if you're just trending to the upside, a lot of people just throw their risk management out the window and just ride the trend and just do crazy. Yeah, that could happen too. But then Ethereum on the daily, haven't been doing much on this. And one thing that kind of looks on this one, which doesn't look good, which makes me think that this could break down. And that's why we have stops in and all of that. When you look at the daily here, the first line of defense was between 2893 and 3100. I got it highlighted in here, and we had 3 settles underneath of it. And then it started to pop back up, but we haven't had 3 settles back above it in this zone. So to me, that's not good. So, because this is typically my first line of defense, and that defense kind of fell apart to where this is not really that strong a support anymore, since this is it didn't break and get into 3 settles. If it did, then I would like this area of support a little better. Otherwise, you want to be looking for the 200%, which is way the hell down there. And so to me, I'm not really doing anything on the daily unless this thing falls apart and gets me down to this 2040, or we get back up into a bull zone, which right now is marked at about 35.65. That would get us up above the shallow fib here and get us back in, most likely above, any trend lines that are formed. If it gets us back above this level in here, then that would be a buy for me to say that we're heading back the other way. Otherwise, sideways to lower on the daily. Not that it can't still consolidate in the zone here if it wants to, because but the bears are still in control with some momentum here. So that's why that cautiously optimistic is it's kind of a cliche word or phrase, but it makes a lot of sense of when you're in the chart in these type of patterns and scenarios. That's where risk management and exposure comes into play. Like, I'm not going to want to, like on my 4 hour here, I'm not going to go all out and just say, new bull zone, we're above this high, I'm going all in. And the next thing you know, you're eating your lunch, So it's always about the risk management. And I know that's, you hear that all the time, but it's something that you got to hear all the time. And I got to keep saying it so I could keep it in my head that I got to keep that too. So,
Yep.
All right. Gold. What's happening in gold? Gold 4 hour, went into the bull zone, hit our target. We had a nice gold trade on this here. Wick came back down and hit the shallow fib, and it went back up to the upside here, but it didn't make a new high. So when it dipped back down to the shallow fib, you don't buy again. The only way you would have done that is if we would have made a little bit of a higher high, and then it came back down to a shallow fib, and then you would have rebought. But for now, out, and then you're back in, and then you're in the money, and it almost got to the target, or it almost got to the it did wick up to the target again. Not that this is the target you would sell, because this buy here is the target's up here on the 200%. But again, the shallow fib is back in play. Oh no, it's not. I thought it was, because that only if it would have made a new high up here. So if this comes back down to the shallow fib, don't rebuy it if you're already long. Now, if you want to, if it comes back down to the shallow fib and you're not long, then it is a buy, with the risk being the bear zone. So if you get down here at 42.14, your bear zone is going to be your risk. Now, again, it's depending on what kind of gold you're buying. If you're buying it off of this, which is the gold futures contract, this shallow fib buy to where the zone is a very high risk because of the leverage. So you might want to take into consideration tighter stops or something that kind of fits your program a little better. Because sometimes the futures risks are a little higher, you might not be willing to take that full risk. Because for me, it's a bear zone and 3 settles underneath, which could be ugly if it comes to that. But again, of course, I manage it, and I don't take drawdowns to a certain percentage below, that kind of thing. So, but I will continue to play it up until that maximum threshold that I like to take risk on from that point. But it starts out as a buy at the shallow fib, and then the stop would be a bear zone, but you still have to have the 3 settles underneath the shallow fib. But if it gets ugly, then of course you get out. But get to the maximum threshold of what you're allowed to, or what you allow yourself to take that risk, your drawdown risk, or what you want to call it, or whatever, that kind of thing. But that's what's happening in gold, which is good. I like that it's kind of holding in here, because it's kind of setting up nicely to get a nice little run to the upside. And made this new high, get a little bit of consolidation. Really hasn't broke down below this previous shallow fib area that I had on the downside. I really like my shallow fib levels, or not my threshold levels, to be really key support and resistance into the future. And so far, this 100% here is matched up really nicely of where this was previously. To get those fibs, it would take me a little while to explain it, but because it basically goes into this bear zone, and then you have to kind of adjust it based on this new zone that you went into. But it's kind of hard to explain because I don't really have it all up here. But I like that this is matched up nicely where the support is. So that's why I would be willing to buy this on a dip back, because I'm not long gold at the moment. I sold out, and I got busy and never really got back into it. But I know there's people in my group that are. So if you are long, don't rebuy and add too much risk. It's more along the lines, if you're not in, this would be a good spot to get back in, because I like the support there. And then if you take a trend-based extension off of this, and I usually take it from the start of there, and go like this, this can give you some other quicker targets, so you don't have to wait for such a high target like this. This will give you like another high target. So if you buy here at the shallow fibs at 42.14, and then 43.29 would be basically that would be your trade. So your risk would be the breakdown, and then the take profit would be around 43.29. Or if you want to, if you're a little bit more longer term swing trader and you want to hold it for a little longer, then of course the 200% is what you would want to really watch for into the future there. And another reason why I don't mind buying here if it ends up hitting is when you look at the daily. The daily is still relatively strong with some, and the bulls are still in somewhat control of trend. Even though it broke down here, it's bull zone and the bulls are still in control. So buying it at this point, and having this area in here as that area of support, I like how this is setting up, because if you take this right here, I know it's not the best trend line in the world because it's only got a couple hits, but that's something I would be looking at to give me the signal. Now that this is broken and the bulls are still in control, it gives me the signal that I would like to break into a new high, which would, let me move that down here. Freaking magnet. There we go. And then I guess I could turn it off. Well, it's crooked. Who cares? You know what I mean? If it breaks to the upside here, it breaks into a new high, and that's exactly what you would want. And I like that this whole setup is still going that direction.
Yeah.
And that's why I'm comfortable buying this dip right here and taking that risk. And then silver, I haven't been playing the 4 hour. I've been on the daily, but the 4 hours is clicked into the bull zone, and been rallying up pretty nicely.
Yeah.
When this was at this high right here, and then went up to this high, it just missed the shallow fib. But it's one of those things, like if you were in this and watching it, you might have just went ahead and bought anyway.
Close enough, right?
Yeah, like if you had a limit order in and it was getting close, and if you were watching it, you might have just said, you know what, I'm just going to go to market, because another thing I kind of watch for sometimes is, like, when you go into a bull zone and you get down to the point where the bull zone goes in and you got this level right here, it's kind of the support while you're in the bull zone is where that level is. So when this came down and hit this and didn't break back into the lower part of the bull zone at the time this was happening, and then it kind of to come back up, that could have been like I'm going to move my order a little bit to get back in.
Yeah.
If it didn't hit, but you'd have to really be on it and watching it to do that. But for now, it made a new high, shallow fibs in play. If it does dip down to 56.96, I would be a buy. And of course, this would dip down in the lower part of the bull zone. And I apologize, I don't have the numbers over on the side. But if it comes down to the shallow fib there at 56.96, it would be a buy. And then 63 would be the target on the upside.
Nice.
On that. But I've been trading the daily, and that's where I'm back long again. And this was a kind of a crate. Let me clean this up a little bit so you can see what the heck I'm looking at. We don't need that. Don't need that. Whoop. We do need that. Break that back. I was deleting the wrong things. Let's
whatever you want, man.
All right. What I did here, let me blow this up so you can kind of see it. This is definitely a little risky, but I did it anyway, because I like silver. What I did is, once you get into these fibs, and we've been in the bull zone ever since, we broke into a new high right here on this big green candle. And the first line of defense is that 127 to 141 that I watch for. And that was between 56.01 and 57.18. And then it broke up even higher. And then it came back down and retested this 141%. But we had 1, 2, 3 settles above this level. And that's normally a buy for me. But it was all the way up here. So usually what I do, if we get those 3 settles and you're a pretty good rate of change away from that point, I'll buy half of what I normally would buy, and then I buy the other half on the retest of that support. So what I did was I bought on this candle right here. Basically, my trade is, I'm at an average of 58.35 is where I'm at. So I'm in the money a little bit at the moment. But what I did was I bought half, and then I bought half on this dip to give me a nice dollar cost average in this little zone that we're in. And I did that because we're in the bull zone, and I wanted some exposure, because the 3 settles above this, and if the support holds, the 200% becomes a really high probability of hitting. So I had a couple other targets in here from previous times, because this 141% hit, and then once it broke, then this becomes support, and then the target becomes 61. So actually, I'm actually using that target as my first level. So I'm gonna, since I'm long 20, or I'm long 10% now, I'm going to take half of it here at 61, and then I'm going to take the other half at 62, because I think both of these 200% levels could come into play, and I want to take targets at both those levels. So that's the way I'm kind of playing this. But prior to that, some of these other moves were really, really good.
Yeah.
So that's why I was really kind of I was like, you know what, since I made pretty good money on silver on this move to the upside, if I look at my silver bucket and I take my risk management into play, I could take a little bit more risk. And that's why I bought a little bit, even though it was up on its high. I bought a little bit and then bought a little bit on the dip. So I wouldn't normally do that. But since my bucket for the month looked pretty good, I could say, you know what, I'm going to take that risk and kind of move on from there. So I like the way this is setting up. I think silver could be a really good long-term hold.
It's been so far.
Yeah, it's been so far for sure. So I'm definitely going to keep this daily in mind. Again, I don't have the numbers in here, but if this breaks back down to the shallow fib, that would be a buy. It might go into the bear zone prior to that, but again, you have to have 3 settles underneath this. So this would kind of be my buy if it wants to break all the way back down to kind of test these support levels down here. So basically, you would have like a full retracement off of this, looking at just this latest leg. The 38.2% levels right there. The 61.8% level still holds us in this area of support. So it could come down to this level and head higher, which is fine because I'm bought in here. And if it does, we'll still be in the bull zone, even if it dips down to that point. Maybe I'll buy. That's not threshold theory, but I would definitely look into it and maybe buy some more into here, get a little bit more dollar cost average if that wants to hold, and then stop it all out on the shallow fib. But it all depends on how you want to play it. But for now, I like the structure that's happening. But I wouldn't be surprised if it came all the way up and then back down to retest a full retracement here. But that would still kind of hold this shallow fib as a support point. So that's something I'm looking at that on silver. Going on to SPY real quick. This is the target that I was just talking about with Chris this morning. We went into this bull zone, went into some sideways here, and then it finally went up and hit that first target, and that target hit right there. So for me, it's 3 settles above this on the 100% here to get back in to continue the trend if it wants to go that direction, or a dip back down to 68.22.5 is where the shallow fib is, and if it dips down to that point, it won't go bear because 68.14 is the bear zone and 68.22 would be our entry. So that would be where I'd want to buy it, and then the target up there at 7,011, which comes from this trend-based extension of this move to the upside. Period of consolidation. If this low holds right here, the 61.8% level of that move falls into my fib extension level of my first line of defense for the next move. So that 7,011 is falling right into there. So
I like that.
That's where my target would be on that move to the upside. So that's how I'm playing SPY.
I like the 7,000, man. Go ahead.
Yep, I do too. I do too. And then on the daily has not went bull zone yet, and that's what I've been kind of looking for. Even though it went into the bear zone, it never fell below its previous shallow fib here. Came down and tested pretty closely. But again, it didn't break the bullish structure we've been in. So this is just a bearish correction in a bullish market. And I'm just waiting for that bull zone to go back into play. And then I'll get back long on the daily and then start looking at some upside targets there. So,
Nice.
And then I know I'm running out of time here, but a couple other charts, MST, MicroStrategy or strategy or whatever you want to call it this week, is bearish. It broke that 200% target that I was looking at right there as a buy, and then it broke down. So when I go back into history, find that next mark, and then my next line of defense is pretty wide, but the point right here at this low, and then kind of this area right in here, brings the entry at about 103. So for me, in other words, this is just one of those things that I'm not really trading. And I'm just kind of waiting because it's too bearish for the way I set things up. So it's kind of not even on my radar at the moment because it's going to have to really, really break down or get me back into a bull zone. So I'm in this area of not really trading it because I'm not going to take something and go into a really small time frame just to trade this because it's just not looking good to me right now. The bearishness is still there. And like I talked about on the bull zone, when it went up and kind of, where was that? Was it on the silver? Yeah, right here, where it went up on the bull zone and then it kind of held its support. What's happening on this end is it went down and then came back up and touched it this way. So it's still too bearish for me to even touch right now. So I don't want to mess with it. So that's kind of how I approach looking at the zones, even when we're in a zone, looking for some other areas of resistance and support. And when that happened, that's when the market came back up and retested this as resistance right in here. And now we're kind of heading lower, but kind of ugly, but we'll have to see what kind of plays out. NVIDIA is one that I've been following too. This went into the bull zone, came down here and tested a bunch of times, but it has not went bear yet.
Yeah.
It's been trying. But then again, the previous shallow fib, even if it would have clicked into the bear zone right here, this previous shallow fib at 177.08 has went down a few times, but no 3 consecutive. So that right now is a good buying area to kind of get some NVIDIA. And then just kind of watch the bear zone, because if it goes into the bear zone and we get the 3 settles, that would be your stop. So to me, this is a good spot to be buying into. And then given that it's in the bull zone, the next target up there is at 224. So if you get into this, it would be a nice move to the upside there to give you that 224 target. So
very nice.
So it's actually looking pretty nice. I like the structure on it.
Yeah.
And then again, this is all consolidation to me. So the low to high, it kind of held this consolidation, then it popped back up to a new high. So I just kind of looked at this as that next, that's where that target comes from. I know there's probably other ways you can look at it, but that's kind of the area that I'm going to look at for a target on the upside there. And then I was just looking at iron real quick. Sometimes I'll keep an eye on some of the miners, but again, it's the same kind of thing. You dip down into the bear zone, it hasn't really broken back up into that area, into the upper area of the bear zone, and it broke the 38.2% level, went back up there and retested, and has went back down since. So since we're kind of still bearish there, I'm still waiting for the 61.8% level as my target while it's in this bear zone. But not a lot of momentum, so I don't think it's going to drop there by like real quickly. But we might like kind of stair step our way down to that point, and then I'll be looking to possibly buy at that point. But that's what I got. Sorry, I went so fast through the last ones because I was running out of time there.
Right. Yeah, I know you've got to get out of here, man. We appreciate you as always. What's 2 weeks from now? That's not Christmas yet, is it?
2 weeks from now.
19th. No. So
it's the 19th, and I am out. I am traveling to my family that day, so I will be out.
So we'll probably see you. Oh man, so it'll probably be, because after that then is
the second New Year.
So I'll probably be winning. Okay. All right.
Yeah, I might be around the 26th if you want to try something there, but I know
we'll have to talk about that. I don't know. That's true.
it's Christmas time, but I very well could be very busy. I just don't know yet. But I know I am out on the 19th for sure.
Yeah, definitely. So hey, listen, guys, if you want more of Fibo and you want more of what I do and everything, you can join us over there at members.texaswestcapital.com. And for right now, for December, I'm doing a 25% off of our liquidity cartography course group stuff. And so that works either on the monthly, or on the monthly or the yearly. So the annual's already giving you a couple of free months. And so, 25% off plus those couple of free months actually is really great. But, if you jump in that, you get all part of Fibo's group as well. His threshold theory, you get to learn how to do it. You get man, this man is a machine. He's updating you guys daily, including on the weekends. So if I'm
around, I'm definitely updating.
Yeah, this guy sits on a computer more than I do. I got to tell you right now. So Alvin says
I try not to, but I try my best.
But it gets you. So yeah,
it helps when you're a technical analyst for a day job.
Yeah,
I'm always in charts and markets all the time. So
all
it's
the time. Yep, exactly. Exactly. So hey, jump over. You can get the 25% off. Use the code BF25 on the liquidity cartography. Like I said, it's either the monthly or the annual. It is a forever things. So as long as you remain renewed on that, you'll continue to get that. So, take advantage of the discount while you can. The stuff we teach, guys, again, between the both of us, well over 50 years of experience, guys. And you can have your crypto people that you follow and whatnot, but they're just not going to understand it the same way we do. We've been through all these different futures and stocks and Forex and crypto and everything. So we're bringing a lot that extra. Look at Alvin. Alvin's jump upper says, what do you say here? Come join, talk, trade, talk some banter, make some points, and importantly, learn the markets. And of course, I do live trading Mondays, Tuesdays, and Thursdays with the Liquidity Cartography group. So you can jump in there. I think I'm up about $7,000 over the last 8 days or so. Just trading one account there. So learn how to do it, guys.
I wish I had more time to join you on that. It seems so much fun getting in there and just trading those minute charts or 5-minute charts or whatever the heck you're looking at.
Absolutely. Yeah.
It'd be fun. I just don't have time to do it. I jump in there every once in a while.
Real job, man.
Yeah. I like what I do, man. No, I got a really never mind. One thing I was going to show you is here, starting to move up. Let's get a little bit of move here.
Get a little excited.
Get us back in that bull zone, baby. All
right, man. Well, yeah, again, I know you've got to get out of here, man. I really appreciate you joining. We'll let you all know if we're going to do it right there on the 26th, but right now plan for the following Friday. And there you go. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management and come join us. Members.texaswestcapital.com. Alvin said to do it. Allison said to do it. These are people that are there, the people you'll be trading with and talking to and discussing charts, guys. So we'd love to see you there. Take care. Have a great weekend. And remember, the only thing you control is how much you lose. So please keep working on that risk management. Fibbo, I'll catch you later, man.
All right. Take care. Peace.
Take care.
Trading tip: always manage risk before chasing gains.